being seen across markets to this move from the RBNZ. We're joined by James Audiss from Shaw and Partners. James, great to see you there, and thanks so much for your time. We do appreciate it. First of all, your reaction to this cut. It was a little bit earlier than markets were expecting. Do you think they were trying to get out in front of the ECB?
Well, I'm not sure that they're trying to get out in front of the ECB as much as they're trying to get out in front of themselves. So obviously their concern is that with the lower demand that they're getting for their commodities, that they don't want to go into a disinflationary environment. So it was interesting yesterday. I was asked about the Canadian economic data and the New Zealand economic data, and it turns out that the only two analysts actually called the RBNZ to cut, and one of them was the Royal Bank of Canada. So they're following each other pretty closely, even if we aren't. So obviously we saw the Kiwi dollar come off in sympathy with that, and there's potential that there will be another rate call, and that's at least what RBC is saying for the June meeting for the RBNZ.
It left us watching the Kiwi dollar and also the Aussie dollar. I just wondered what you made of currency moves overnight. We saw the Aussie push above 75. We haven't seen that high since last July. Pretty incredible. Did you expect that?
No, I didn't. Caught completely off guard with that one. And as I said last week, with Morgan Stanley suggesting that they could see it go to 74 when it was closer to 70, they've obviously got that call right, and it's a move further that way. So, the Aussie strength is pretty amazing. It's below 75 just at the moment, but yeah, as you say, taking out July highs from last year.
Let's talk about what we're likely to see at the open today. BHP will be ex-dividend, so that's probably going to take a good chunk out of the index. How do you think we're likely to trade?
Well, interestingly, at the moment, in the pre-market session, BHP is actually looking to be up. So you would think that it would take off at least the dividend amount that's being paid. But at the moment, at this early stage, it's looking like it's indicating up. That could be part to do with obviously the oil strength overnight. Oil had done a bit of backfilling in the session before, as we discussed yesterday. It's certainly taken that back on board, and we saw oil in terms of Brent trade to the 41.41 level, which is the highest that it's seen in this year to date.
How do you feel about the volatility we're seeing in commodity prices at the moment? I feel like 2 weeks ago we were saying everything's calmed down a little bit, things are starting to straighten out, but it's all returned, hasn't it? The volatility ensues. Yeah,
absolutely. We've seen a massive move up, as we spoke about yesterday, in terms of oil moving up over the month by some 13 to 15% across WTI and Brent, and obviously continued on with that last night. So it's incredibly volatile, and everyone's watching oil, but the main eyes now seem to be on ECB.
Yeah, and your expectations for that meeting?
Well, one would hope that Mario Draghi pulls a bazooka on this thing, and I'm not sure the combination of levers that he's going to pull to actually stimulate the ECB area, but market expectations are that he's going to do something, and something fairly drastic, and failing to do that, we're going to get a pretty quick risk-off environment.
Yeah, I do wonder if he's perhaps set the bar too high. Any stocks you'll be watching today?
Not particularly. The Aussie market's not my focus, so I'll just be watching the international markets as they come on board through the day.
Okay, fantastic. Thanks, James. Really appreciate it.
My pleasure. Have a good day.
Well, the Reserve Bank of New Zealand completely surprised